how I lost over 450,000 in one single trade, one single Forex trade back in 2018 or 2017 when I started trading, and how painful that was. But the lessons from that trade actually have taken me through my trading journey all along now. So for those who are trading, it doesn't matter what you're trading, whether you're trading Forex, whether you're trading options, whether you're trading stocks, whether you're trading commodities, indices, and ETFs. What I'm going to discuss in this video is how do you get back from losing so much money, and what my experience with it and the lessons I got from it. So you could as well pick from my lessons so you don't end up losing so much money, because I talk so much about trading and what you need to watch out for. So either you follow my example and avoid those pitfalls, or you go through the pitfalls but then know how to get back up and start trading again. So once again, this is Ken's Money Matters. Welcome. Here we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself for a lifetime of income. Basically financial freedom. So most time you see anything about trading, whether it is in social media or anywhere else, you can see all the pomp around it. You can see all the money being splashed around it. One thing I tell people about trading, the truth of the matter is trading isn't easy. It takes time, it takes practice, it takes confidence, it takes building your strategy, it takes planning. It's just like any other skill that you want to learn in life. But most of the time, the people who are trading Forex, trading stocks, trading whatever commodities, they come online, they come to social media because they want to sell something or they want to present a particular lifestyle. They lie to most people that trading is easy. Trading isn't that simple. Trading is like any other skill. The only problem actually is not that trading is difficult. It's because of the mentality or the mindset with which people come into trading. So people come into trading with all this mindset of it's going to be easy, it's going to be a very fast track to getting money, getting loads of money. You're going to make crazy money, right? You come to Forex trading, you're thinking you're going to make crazy money. You come into stocks trading, you're going to make crazy money with penny stocks, with major stocks, with all these things that people always present to you and sell you and tell you that you can make money very fast. So with my videos, I tell the truth about trading. I say this is a skill that you learn like any other skill you could learn in your life. And therefore, you don't want to come with that mentality of you're going to make quick money, because that's how you lose money and end up in a pit that becomes very difficult to get out of. But because I've gone to the same pit and I've gone through the same problems, I want to give you that blueprint so you don't have to go through the same problem, lose so much money, and then come back out. Now, back in 2017, I started trading. I had done all the research you can imagine. I had done all the reading you can imagine. I had done trading on demo. I had done all those things that most books will tell you. But what they don't tell you is that trading on demo and trading in real account are two different ball games. When you put your money on the line and you watch it going up and down, that's when you know how attached you are to your money, or how it affects you or your risk level. So when I got into the market, first thing I did is think that, oh, it's going to be similar to what I've done on the demo. So I had actually worked on my strategy. I had tried it on the demo and I was like, damn, this is making money. This is like going to be so good. So I go back to my real account, put in money the first time. I didn't put so much. I put like maybe 200K, put in money, and then I start trading. The first day I make good money. I come out with way good money. But the problem is that the moment I made the first trade and I got so much money, I got over 500 pounds in one trade. 500 pounds would be like almost 100K. So I was getting half my account in one single trade. And then I thought like, okay, this is really good, so I can make money. And what happens with that is that your emotions comes into play. Like I say, if you cannot get hold of your emotions, if you can't regulate your emotions, then trading becomes one of the most difficult things you will ever try. So I got excited, I felt good about it, and I got like 500 pounds in like a few minutes. I was like, wow, this is amazing. That's almost 100,000 in just a few minutes. And what happens after that is that you throw away your strategy, you throw away your target for that day, you throw away all the plans that you had, and now you get into the market because of excitement. When that excitement kicks in, now you start making mistakes. So I got into the market again, made more money that day. Second day again, made some money. Then third day, boom, I lost money in one single trade. Why? Because I forgot about my strategy completely. And I was now focusing more on, I want to beat my first trade where I got 500 pounds. If I made 500 pounds in the first trade, why do I want to make 200 pounds in the second trade? Because I'm like, I can make more. And what happens? You throw away your strategy, your plan, and everything else, and now you're trying to beat that record. What you're doing is just overtrading and overtrading and overtrading. Overtrading is basically putting so many trades, revenge trading, whereby you're feeling like, oh, I've lost that money, I need to get it back immediately. It became so bad. I lost 450K in a single trade. minus all the other money that I've lost. Because if you're trading Forex, you'll always lose money. So that is minus all the other money I had lost, even on that day. So obviously, if I look at that day alone, I would have lost way more than that. So sometimes winning actually makes you lose money in trading, because the moment you win, your emotions comes into play, you throw away everything, your discipline goes out the window, and then now you start trading for the sake of it. You start doing what we call gambling. It's just pure gambling. But anyway, I learned lessons from this, and I want to give you some of these lessons so you don't have to go through the same thing. Number one, trading is not investing. And this is something I tell people all the time. Don't trade because you think that's an investment. That's not an investment. Trading is basically you going into the market to get some money. So this is cash flow. This is a business. So you put some money into the trading account, you're trying to make some cash flow out of it. So this is more like a business. This is like a transaction whereby you're trying to make money. So don't call trading, or don't refer to trading as investing. Money that is invested is different from money used for trading. Money used for trading is money that you're willing to lose all of it at any time, right? So trading is not investing. If you're investing, have that as a separate account. But if you're trading, use that money, that's a risky account that you use for trading, trying to make money back and forth, trying to get your cash flow, trying to get some money, some income basically. It's like a job or a business, something that's supposed to give you money consistently and regularly. So trading is not investing. Investing is different. You put money somewhere, you expect it to grow over time, you expect it to earn you some money in a much safer environment, because again, if you look at the environment of trading, it's way, way, way risky. So you don't want to refer to it as investing really, because that money could go in a second. So I always say, don't mix those two things. If you are going to invest somewhere, put some money somewhere aside, let it grow, let it earn you some money as passive income, let it be a relatively safe thing that you have actually analyzed your risk level and you are comfortable with. Trading, the risk level is completely different, because all of us take that risk. So it's not like you analyzing and then you're taking what you're comfortable with. Whether you're comfortable with it or not, trading in itself is going to be risky, way, way risky. So you want to make sure that you have your investment separate. The second thing, you will lose money whether you like it or not. Now, this is just in the journey of investing, in the journey of trading, in the journey of doing anything else with money. Be comfortable and be ready that you will at some point lose money. It's just part of the game. And that means you shouldn't be too attached. You should always be aware that you can make that money back. You should have the confidence that, hey, in this process, I can lose money. What you need to determine is how much are you comfortable losing. Like I always say, if you're going to trade Forex, only put what you're comfortable losing. Do not put anything extra. But you also need to know that in the journey of you trying to make money, trying to grow wealth, trying to build wealth, you're going to lose some money. And you should be comfortable with that idea. Sometimes you lose way more than you planned because you make mistakes. We are human. Sometimes you lose what you actually were willing to lose. So you need to be in that position whereby you know that part of you building wealth, part of you taking opportunities, taking risks, trying different things, losing money is part of the game. So it shouldn't be something that really affects you so much. You shouldn't be too attached or emotionally attached to your money. The third thing, money management is key. You want to make sure you manage the money that you have in your trading account. If you had 100,000 Kenya shillings as your trading capital and you lost it in one trade, you have no capital. So meaning your trading has stopped. So you need to manage your money by all means. You can manage your money through risk control, making sure you only risk what you're comfortable with. You can manage your money by only risking a small bit of your whole capital. You can manage your money by having your stop losses in place all the time. You can manage your money by making sure that each time you lose money, you stop trading, you don't overtrade. You manage your money in different ways. You can manage your money by risk-reward ratio, by ensuring that whatever it is you put in a trade, what you're getting out of it is more than what you're risking. So each time you're risking 1, you should be getting 2. So making sure that your risk management is really, really good and your risk-reward ratio is quite high. So it can be 2 to 1, can be 3 to 1, can be 4 to 1. So that's part of money management as well. Manage your capital. That is what makes you trade. That's what you have. If you don't have that capital, there's no trading for you. The fourth thing is something I've also mentioned. Trade with what you can afford to lose. So whatever you put in that trading account should be what you can afford to lose. Don't put in your rent. Don't put in money that is supposed to sustain your life on a daily basis, because that money can be lost. So only put what you feel comfortable losing in the market. And then there's a very important point. You need to start small and build on your strategy. Don't go in there with like so much money. That's not it. Most time people come to me and ask me, hey Ken, how much should I use to start trading? It's not just about how much. It's about what you're willing to lose, like I mentioned. But again, you want to use something that's just going to help you build your skill set first, build your strategy, see how disciplined you are, see how emotional you are, see how much you will follow your plan when you actually in the market, when the market conditions are against you or are for you. see how you are in the market before you then go in with some good money. So start with small amount, build on that confidence, build on that strategy, see if it works in a real account, see if it works for you, and then with time you can now add more money into your capital once you start making money. The final one is discipline is key. If you're not disciplined in trading, forget about it. Whether it is actually investing or just trading, discipline is key. What's discipline? It means number one, you want to be consistent and you want to follow everything you have on your strategy to the T. Not that when you get money like I did, I'm like, okay, now I want to just risk it all, right? Now I want to go all the way. Now I want to try and make way more than I made yesterday. Now I want to beat my record. That's not how it is. Your discipline is you following your strategy. You have a strategy that's written down. You have a strategy that you should follow. Follow that strategy to the T and make sure that you're making money out of it before you start risking some crazy amount of money. And even if you win money now, or you get money today, or you get in profit today, the next day should not be you comparing your record yesterday and today and trying to beat it. Your only intention should be following all the details you put down as part of your strategy. And you follow it from point one to the last point, making sure that your market conditions are met before you enter any trade. The conditions you put down in your strategy must be met before you enter any trade. If one of them is not met, don't trade. And there are always opportunities in the market to make money. But one thing is that losing money teaches you so much. It makes you become much aware, makes you become also some level fearful. And therefore, that's a good thing if that fear gives you some level of control, because we get emotional around money. When we see money coming easy, we want to get more. When we see it not coming, we also want to try too hard. So there are many things that we need to regulate around our money. And the psychology of trading is the most important bit, which I've done a video on. Your psychology around trading, your emotions around trading will determine if you succeed in trading or not. So let me know, have you traded, whether it is stocks, whether it is Forex, whether it is commodities, options, futures, have you traded, and what was your experience, and what did you learn from that experience? I hope my experience can help you learn something, but losing almost $500,000 in one single trade is not the easiest thing. The feeling is crazy. You will feel bad, you will feel angry, you will want to revenge trade, you will feel like you want to give up. It's just so unsettling and so difficult to deal with. But you know what? With time, you get used to it, and then you realize this is part of the journey, this is part of the experience. You just become more careful, you get your money management skills up, and then you focus on, you know what? I need to build my strategy instead of making loads of money fast. Let me know what you think in the comment section below and share this video, guys. Till next time, I'm out.